Cash flow statement.
Right, we have cash flow statement. Today we're going to be dealing with cash flow statement, which is question 2 of your paper on the 27th of October. Yes, so in this question, what they will ask you is that there will be 3 ways of answering this question, whether it is a cash flow structure or neither a note of the cash flow. Remember, it's notes on this corner, 5. And it's no cash money generated. So no net changes in cash and cash equivalent. So dividends paid. So income tax. Then so it's 50 assets, which is these are the 5 notes of the cash flow statement. Then after these notes, we have activities. We have activities. How many activities do we have in the cash flow? We have 3 activities. Like I said, operating activities. Operating activities. Investing activities. Financing activities. Then these 3 activities. Here in operating activities, we have 4 things. Here we have 3 things. Here we have 3 things. And what are the 3 things which falls under the operating activities? We have note number 1 of the cash flow, which is cash generated. We have number 2. We have interest. Interest paid. We have interest paid. We have taxation paid. We have lastly, we have dividends. Dividends paid. These are the 4 things which you can find on your cash flow statement operating activities. We do there. Then we have finances on investing activities. How does the company invest in itself? Number 1, we are investing by purchasing. Purchasing of what? Of fixed assets. We are investing by purchasing of fixed assets, which is note number 5 of the cash flow statement. We have number 2, disposal. Sale of an asset, disposal, which is also number 5 of the cash flow statement. Then we have lastly, plus or minus investment. Whereby we are checking the change in investment. How much we had last year and then how much we have this year. Then the previous minus current is equal to the amount which was matured, or rather the amount which have been invested or reinvested by the company. Remember, in our notes number investing, number 5, we have Bad which is balance beginning, addition, disposal, depreciation, and then balance at the end. That is our note number 5 of the cash flow, which could have been required to you when I'm in investing activities. Then we have financing activities. How does the company finance itself? Each company is the financer. Number 1, we finance by issuing shares. Money proceed of issuing shares. Shares issued by issuing shares. Number 1, Kumbula in your baby. Balance at the beginning, addition, buyback, and then balance at the end. This is our ordinary share capital note number 7. Then we take this amount and put it here as what? As proceed from shares issued. Number 2, we have buyback of shares on a repurchase of shares, which is also here. Remember, we have actual price, above average price, and then average price. Then we add the average price and above average price to get what? Actual price, which you're going to work on that, which you're going to use where? On your cash flow statement when you buy back of shares or repurchase of shares. Then lastly, we have this thing called a loan, plus or minus loan. Is either it's a repayment or neither it's an requirement of any loan. Then we say previous minus minus current. That is your balance. So that is your cash flow statement. Remember, at the end, then you're going to have the note number 2 of the cash flow, which is net change in cash and cash equivalent. Well, we have to say balance at the beginning. Got cash and cash equivalent, and then minus opening minus bank overdraft. Then you get your balance at the beginning of the cash and cash equivalent. Then it's the balance at what? At end. The very same thing applies with opening, so with the end minus bank over what? Overdraft here. That's done, and that's the cash flow statement.